Hi there, welcome back. Thanks so much for staying tuned to Market Fatafat. You're watching ET now. Let's keep it going with all the stocks on the back of the news flow as well as on technicals. And now on the technicals, joining us is Chandan Taparia, derivatives and technical analyst at Motilal Oswal. And joining us, in fact, on the show once again is Ria. And Chandan, thank you so much for joining us. You've picked out Voltas on the charts for us. When I pull up these charts on a year-to-date basis itself, the stock is up 85%. 1 year, the stock has more than doubled itself. What's the outlook going ahead? Is it time for some slowdown now, or do you expect this momentum to sustain?
Thanks for having me. Recently, the stock has bottomed out with support of 1750, and after that has been consolidating in range. However, we witnessed some profit booking decline in last 3-4 days due to the market weakness, but major supports are intact. And at the time of decline, we are not witnessing any surge in the volume, which clearly indicates that dips are only happening due to the market pressure. So I believe that broader structure that is intact to positive would continue its momentum going forward. So use any small decline as a buying opportunity. 1750 is a major support, and with this support, Voltas has potential to extend the move towards 1920 to 1950 levels on the higher side.
This is the call coming in on Voltas, but let's talk about Sion DLM, another big loser in fact in today's trade. And the company's revenue rose by 33.4% year-on-year to 389.4 crore rupees compared to 292 crore recorded in the same quarter last year. Sion DLM's consolidated profit after tax also grew by just 5.4% to 15.5 crores in this quarter that went by compared to 14.7 crores on a year-on-year basis. EBITDA, however, increased by 34.4%. You had EBITDA margins, however, that stayed unchanged at 8.1%. On the flip side, though, the company's PAT margin dropped 105 basis points year-on-year to 4% in Q2, and the company's total orders were also down by 147.7 crore rupees on a sequential basis to come in at just 1,979 crores. So these are the reasons why, despite posting a growth in operational performance on the back of the tepid order wins as well as the PAT margin losing 105 bips, the stock is down 4.6% as we speak.
Alright, that's about Sion DLM, but let's shift focus to what Varun Beverages is doing in today's trading session, and this was also one of the earnings candidate where the revenue has seen a jump of 25% on a YY basis at 9,332 crores, while the profit is up close to 24% at 620 crores. In terms of the margins, that has also seen an improvement of 94 basis points on a YY basis at 23.3% registered in Q2 of FY25. So all in all, a decent set coming in from Varun Beverages, and hence the up move on the stock price as well, which is holding on to the gains of 2% right now. But the key to note will be the management commentary, because today at 2:30 p.m. we will have the con call. So all eyes on that with respect to the kind of outlook that the company management does share on Varun Beverages. But for now, the stock is holding on to the greens.
Absolutely decent set of numbers coming in. Revenue, EBITDA largely in line. Slight miss on PAT, but the street is reacting well to these earnings. But speaking of urban and rural demand scenario, Mayank Shah, the Vice President at Parle Products, said that they are confident of good rural demand to sustain at least till Diwali this year. But what is his guidance on value growth? Let's go across and listen in.
We are seeing strong demand coming in from rural. Urban demand relatively has been resilient. So I think this festive, and normally festive season, typically starts for us from about August onwards. So you have 15th August and Raksha Bandhan, Onam, Ganpati, Ganesh Chaturthi or Puja, and then Dasara and all those things, following. So all the way till Christmas. So I think, we've seen good demand coming in from rural India, good revival of demand in the initial part of the festive times, and we expect that to continue all the way till Diwali and even post Diwali. We are seeing, some strengthening of or some increase in prices happening in products, and that would be something that would lead to positive or a higher value growth compared to volume growth. So currently, as we speak, I think volume and value growth are both to the tune of about 7-8%. But going forward, we may see value growth outpacing volume growth.
All right, moving on then, and let's put the spotlight on Eicher Motors. Ria, take us through what's happening here and what's the latest news flow regarding this one.
Yes, So Eicher Motors is in focus today since Royal Enfield has begun operations in Bangladesh with the inauguration of its flagship showroom in Dhaka, and they've also launched 4 new models called the Hunter 350, the Meteor 350 and the Classic and Bullet 350 as well, for which the bookings are going to begin today, so we're keeping an eye out on that. They've also set up the manufacturing unit in Bangladesh with 30,000 units of annual capacity to cater to and to grow the burgeoning demand for the premium middleweight motorcycles in the market. We're not seeing a big reaction on the stock price, though it is trading flat at the moment, but we are keeping an eye out on Eicher Motors on the back of this news flow.
Okay, so trading flat despite a positive news flow is where Eicher Motors is. But Chandan, you've picked out Bharti Airtel on the charts for us. Tell us what levels are you spotting and which direction are you expecting the stock to head in?
So Bharti Airtel is one of the strongest counter which rallied well by more than 65% in this year and doing well from last 6 year on year-to-year basis. We have noticed sustained buying interest in the counter. However, it has been consolidating in a range from last 4-5 days due to the weakness in the market. But I believe a small follow-up could lead the stock to higher zone. So with support of 1630, Bharti Airtel has potential to climb the high towards 1800 zone.
Those are the levels that Chandan is spotting on Bharti Airtel. Let's draw attention to two counters that have been in focus today on the back of a major announcement coming in just this morning, and I'm talking about Ambuja Cements as well as Orient Cement. Now, Ambuja Cement announced that it will acquire 46.8% of Orient Cement Limited at an equity value of 8,100 crore rupees with an aim of reaching its 100 MTPA cement capacity in FY25 target and also improving its pan-India market share by 2%. Additionally, the cement giant made an open offer to acquire additional 26% stake. The open offer is being made at 395.4 rupees per equity share, which has been determined in accordance with the SAST regulations, is what the company has said. Ambuja will acquire 46.8% shares of Orient Cement from its current promoters and certain public shareholders, and the acquisition will be fully funded through internal accruals. When this announcement came through in the morning, both the stocks were doing phenomenally well. In fact, Orient Cement opened also with an uptick of 5.5%, but both of these stocks have lost all those gains, fizzled out and into the negative 1.2 and 1.3% respectively lower are where both of those stocks are at.
Alright, but sticking with the cement space and on this particular news flow wherein Adani's Ambuja Cement was acquired by Orient Cement, and on that we caught up with CK Birla Group CFO Mr. Madhavan Hariharan, who highlights the synergies from this transaction going ahead. Let's go across and listen in.
They want to expand, so obviously I'm expecting that the expansion plan that we are already started will continue in full swing. So there is obviously looking for value creation opportunities for them as well, and there is enough and more in the asset to do that. And with their combining their capabilities, I think this is a great platform to build for the asset and for them as well. Our capital allocation strategy is to continue to invest in the businesses that I had mentioned already, and we have already been doing this over the last few years. In terms of the investment. So if you see other businesses of the group, we have been both organically and inorganically growing both within and outside India. So this will only go to help us accelerate that strategy. We are a $3 billion group now. Our vision is to double that in the next 5 years, but more importantly, to triple value creation. I think we have done a good job so far over the last few years in terms of improving value. But the real opportunity is also moving forward, and we have an ambition of also expanding globally, and this will only help us accelerate that strategy as a group.
Alright, but sticking with the cement space there, and let's put the spotlight on Ultratech Cement, because just yesterday we did see the numbers coming in for this particular stock, wherein just after the earnings there was a sharp drop on the stock price. But today brokerage notes have come in, wherein first up Goldman Sachs maintaining a buy but have cut the target price to 11,720 rupees. What they're highlighting is that in the Q2 there was a weak profitability, but the management is optimistic on the second half recovery. Ultratech is the only buy in the sector coverage as per Goldman Sachs, and they're bullish on the strong balance sheet, cost saving roadmap for the company. While BofA also has gone ahead and cut the target price to 1,230 rupees, the worst on profitability it seems behind is what they're highlighting, and even Bernstein continues to maintain their market perform rating with the target price of 10,508 rupees. The market remain market performance given the upcoming supply and rich valuation. So on the back of these brokerage note, Ultratech Cement is in focus today.
Okay, so brokerage notes, in fact, keeping Ultratech Cement in focus after its earnings. But Chandan, you've picked out HCL Tech on the charts for us. It's been a very stellar Q2 for this company this time. On the charts also, last 1 year, 50% uptick. So what's next on the charts for HCL Tech?
Yeah, charts are quite strong in this scenario. We have noticed that selective IT stocks are doing well, and HCL Tech is one of the strongest names. From last almost 92 days, the stock has been holding well above 50-day exponential moving average. However, in last 4 days, it witnessed some decline, and corporate action and dividend is also there. And I believe that is a buying opportunity. With the support of 1785, we are expecting a run up towards 1920 to 1915 HCL Tech.
All right, that's about HCL Tech. But with this, it's yet again time to slip into a very short break. Viewers, don't go anywhere. We'll be right back with more. Welcome back to Market Fatafat on ET now, and let's put the spotlight on the listing for the day, and that is Hyundai Motors. And Ria, not a great listing for the company, but what are the brokerages saying?
At a discount of 1.5% to its IPO price of rupees 1,960, and we have two brokerages initiating coverage on the stock today. The first one is Nomura, which has initiated a buy rating with a target price of rupees 2,472, saying that the ongoing premiumization should drive high quality growth, and there is also long runway for the Indian car industry, seeing as the current penetration is at 36 cars per 1,000 people. They've also said that the company is poised for healthy long-term growth due to its style and technology, and the key catalysts going forward are going to be the capacity expansion in H2 and the launch of several new models as well, including 4 EVs over the next 3 to 4 years. We also have Macquarie initiating an outperform rating with a target price of rupees 2,235, saying that there is a PV premiumization and growth pure play for the stock, and they believe that Hyundai deserves to trade at a premium PE multiple versus its peers. They've also said that the market share in core segments has stabilized or improved from its recent lows, and they are seeing a favorable portfolio mix and a premium positioning going forward. And the stock is actually down almost 6% as we speak, even after these two bullish notes coming in.
Well, tepid listing coming in for Hyundai Motors, but after a muted listing, Hyundai India management remains optimistic about the SUV market and expanding their share in the industry. COO Tarun Garg added that their royalty to parent will not change. Let's go across and listen into what he had to say.
Data EV is going to be launched in the next quarter, followed by 3 more EVs in the mass and the mass premium segment. This EV plan is being also being backed by a very strong localization. So as we speak today, the battery packs are being localized in Tamil Nadu. Going forward, we are looking at LFP cell manufacturing with a local Indian partner. We are looking at powertrain, drivetrain and power electronics as well. Also the charging infrastructure. So which will again be a growth driver moving forward. At the Q1 financial year 24-25, which are already a part of the RHP, already include the higher royalty rate. So I think this is something which I just want to clarify. So Q1 financial year 24-25, which is April to June period, financial year 24-25, it includes the higher royalty rate.
All right then, but moving on, let's shift focus to Oberoi Realty. This was also one of the earning candidates, and after that, the brokerage note also coming in when the Jeffrey continues to maintain its hold rating, but have gone ahead and raised the target price to 1,900 rupees. Now, there's been a jump in sales at the Worli and the Goregaon projects that did rose the pre-sales as well as the PNL was a beat this time. The lease rentals are also scaling up on the leasing at their commercial office spaces, and they also plan to show the equity, plan plan to raise the equity that shows an intent to capitalize on the large opportunity in the residential market. Even BofA has come out with a note where they continue to maintain an underperform rating on this one, and target price is way lower than current market price at 1175 rupees. The Q2 sales trajectory is improving off a low base, but they do await an uptick on the new project additions. So on the back of these brokerage notes, Oberoi Realty is in focus, while Jefferies continues to remain with its bullish stance, while BofA is not sounding that optimistic on this particular stock.
Okay, so that's the take on Oberoi Realty, 1.5% lower. In fact, let's keep it going with the realty space. Chandan, you picked out DLF. Lots of frenzy surrounding its recent project in Gurgaon. But if you take a look at the stock on the charts, it's not done much over the last 1 month or 6 months. So what's the view going ahead on the charts for this one?
So DLF has been making lower top, lower bottom from last couple of days. Nifty real estate counter has seen some breakdown and selling pressure is clearly visible. Multiple rounding formations clearly indicates the decline could be there. So a hold below 815 can open the downside of further 5 to 7%, which can take it to 780 marks. So till it holds below 850, weakness could continue and stock can see further slide going forward.
Well, the slide is in fact what Chandan is penciling in for DLF. But let's shift focus and talk about Sona BLW, also known as Sona Comstar on the street. The company has announced that it has inaugurated its new plant in Manesar in Haryana, and the company has also said that this is their second plant for the driveline business in the IMT Manesar Haryana region. Now, additionally, the company said that the production at the new plant has commenced, and this plant will assist in catering to the growing demand for the driveline products of the company, is what Sona BLW has said in a statement. On that note, Sona Comstar in fact was 2% higher earlier in the trading session, but has fizzled out some of those gains. Nonetheless, manages to continue to hold on to the greens. Slightly more than 0.5% higher is where the stock is right now.
Alright, that's about Sona BLW. But Chandan, take us through what's happening with Bandhan Bank and what exciting are you spotting on this particular stock? Chandan, your take on Bandhan Bank?
Yeah, Bandhan Bank looks weak. We have seen the formation of lower top, lower bottom. In fact, the stock has broken an important support of 185. Shorts are clearly visible in the counter, and we started to witness the put unwinding, which also indicates the downside to continue. Looking at the current price structure, stock can dip down to 165 zone, and I think that will be the lowest level of the counter. So weakness could continue till it remains below 181. Continue with the negative positions or exit from your long position. Stock can go to the lifetime low levels.
Let's move away from that. Ria, you've picked out Union Bank on the back of its Q2 numbers. Tell us what the numbers were like and how the street is reacting to that.
Yes, well, so the net profit for Union Bank has increased by around 34% on a year-on-year basis. Even the net interest income grew by around 44% over the previous year. If you talk about the deposits, the bank now has a total deposits base of rupees 12 lakh crores at the end of the September quarter. Even the gross NPA percentage has reduced by 202 basis points on a year-on-year basis to 4.36%. The net NPA percentage has reduced by around 32 basis points on a year-on-year basis to 0.98% in this quarter. If you talk about the ratios, the return on assets and the ROE now stands at 1.35% and 19.1% respectively. However, there has been a slight rise in the slippages in the corporate book. Now the slippage ratio has also increased to 2.5% or 2.4% actually versus 1.4% last year. So that is one thing that's weighing on an otherwise good set of numbers, and the stock is also trading with cuts of around 2.5% reacting to these earnings.
All right, that's about Union Bank, how the numbers and why the stock is under pressure today. But let's move on, and the other stock that we wish to highlight is yet again from the banking name, and that is Canara Bank. And Chandan, once again, a weak counter within the banking space.
Yeah, so most of the PSU banks are making lower top, lower bottom. Clearly, the weak structure with slope of falling supply trend line indicates the downside. Earlier, it used to have multiple support near 102 that is broken decisively, and shorts are intact, and I believe this weakness could persist. So as of now, looking at the structure, till it remains below 102, more weakness could be there in the counter, which can take it to us 90 to 88 zone.
That's
About Canara Bank, but with this fears, we are totally timed out in this edition of Market Fatafat. Thank you so much, Chandan, as well as Ria, for making the time out, and Lakshmikant earlier for joining us today and highlighting all the buzzers in trade right now. But with this, me and Snehi will also take your leave. But before that, another word of caution from the market regulator SEBI, whole-time director Ashwini Bhatia, who says that the first-time investors must not trade in FNO and be careful while investing in SMEs. Let's go across and listen into him.
SEBI has tightened the margin requirements for trading in FNO segment. This could lead to a more cautious approach and will ensure that retail investors have enough capital to absorb losses. Shield investors against speculative activities, measures were taken to make F&O expensive for individual investors. If you're a first-time investors, don't look at trading and making money through F&O. SEBI has recently also passed some orders just to give you a taste or idea of what is actually going on. So investors, retail ones especially, are advised to be extremely careful while investing in this segment.
But with this, viewers, it's a wrap in this edition of Market Fatafat. Thank you so much for watching. But with that, we are leaving you with another word wherein valuations continue to be a challenge when it comes to the market. And those are the words coming in from Ashwini Agrawal, who is the founder at Demeter Advisors. Let's listen in to what else he had to say about the markets.
Earnings season's turning out to be a little bit soft. I think the economy has slowed down. Now, let's see how the festival sales do and if there's a sort of sharp uptick in the economy once again, which, as per the RBI, had slowed down because of unseasonal rains and excessive rains. But I don't know if that will happen or not. And I think the valuations are continuing to be challenging in many pockets. So I don't think that there is a lot of room for the market to move up. Now, how much will it fall is something that I'm not very clear about, because every fall has been rewarded for buyers. And I think that lesson has gone down very well. So, any dip, you see a massive amount of buying coming in. Obviously, this time around, things are a little different because there's also a lot of supply of paper, both primary as well as secondary, which is happening. So that might actually kind of neutralize the inflows that we are seeing. But I don't want to underestimate the power of the local investor. So it's difficult to say how much it will go down, but I don't feel very good at this point.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.